Hi, I'm Debi Peverill from Peverill Financial Training Group, and this is our annual video on filling in the TD1 form. This particular video is the TD1 for Ontario for 2025. So the TD1 form itself, of course, is a form that you fill in to give to your employer, so your employer takes the right amount of income tax from this paycheck. And it doesn't have any impact on your tax return, of course. So if you fail to put something on this TD1 form that you are eligible for, your employer will take more tax and you'll get a refund at the end of the year. It's not like you've lost the deduction forever. We also did a federal TD1 video, and that one, explains everything to do with the federal form, which is similar to, but not exactly the same as, the Ontario form. And if you live in Ontario, of course, you also live in Canada, so you need to do both forms. This is a two-page form, front and back. The first of it is your name, date of birth, address, social insurance number. You should have that information readily at hand to fill in the form. And then we get into the boxes. The first box for 2025 is $12,747, and what that is your personal exemption for that year. Everyone is entitled to that exemption if they've lived in Canada throughout the year. It might even be pre-printed on the form in box 1. Box 2 only applies if you're over the age of 65 by the end of 2025. If this is not your age group, then you can put a 0 in box 2. For people who are over the age of 65, if you earn $46,330 or less, you are going to put the amount $6,223 in that box. If you earn more than $87,817, you have no claim for the age amount. The age amount only applies to people who earn income under the $87,000. If you're between the 46 and the 87,000, there's a proration, and it's on the Ontario worksheet form. So you fill in the blanks there. You take your estimated income, you subtract the $46,333, you multiply whatever you get by 15% and subtract $6,223, and now you have your age credit. If you're over $87,817, there's no point in doing that form. It's going to come up that you get no credit. So this is just for the people in between the bottom and the max. Box 3 is pension income other than CPP, OAS, the Quebec pension, or GIS. You can claim $1,762 unless your pension income is less. So if you only have $500 in pension income this year, you can only claim a $500 credit. Box 4 is for the disability tax credit. If you are eligible for the disability tax credit, then you know this because you have gotten a letter from CRA saying you're eligible and telling you for what years you're eligible. If you're eligible for 2025, the amount you put in box 4 is $10,298. Box 5 is about your spouse. If your spouse earns no income, then you can claim a full deduction for that spouse of $10,823. If your spouse's income is more than $946 but less than $11,905, there's a proration. Okay, so nothing over the $11,000, you don't get any deduction for a spouse who earns that much income. You can prorate it if it's between the two numbers, and there's a worksheet. Box 6 is for people who do not have a spouse, but they do have a dependent child. So a child under the age of 18 that doesn't earn income, and again, you don't have a spouse. Another thing about this one, I get a lot of questions about this, and I went over in a lot more detail in the federal form, is you don't have more than one claim. So if you have 5 children and no spouse, you still can only claim one child as this eligible dependent. So you look, the child that has the least amount of income would be a good one to pick. If a child has more than this $11,905 of income, then you cannot claim them. So the caregiver amount. There's several of these caregiver amounts. They are somewhat confusing and they all have worksheets. So if you are taking care of an infirm spouse, an infirm eligible dependent, or another infirm person who is over the age of 18, there are calculations for each one of these potential credits. And this will be done more properly on your tax return, because right now, if you're picking an income number, you're picking an income number for a dependent for a year that hasn't happened yet. So it's entirely possible that your estimate won't be accurate, and therefore you won't get the same credit on your tax return that you estimated on your TD1 form. But of course you can do the estimate and put the number on your TD1 form. So the Caregiver Amount in box 7 is for a dependent living with you. It is $6,008 if the dependent's income is 0. There's a proration available if the dependent's income is less than $26,562. If it's over $26,562, there is no credit. The amounts transferred from a spouse go in box 8. So do you have a spouse who's full-time in university? They can transfer $5,000 of tuition to you if they don't need it for their own income. If your spouse has the disability tax credit, then they can transfer their tuition up to $5,000 to you as well. Okay. What else? Pension income. Pension income can be transferred. The deduction, that $1,072 we talked about earlier, and the disability can be transferred. That's box 8. Box 9 is from a dependent. So the two different boxes, one's from spouse, one's from a dependent. Same idea. If you've got a kid in university, then that tuition can be transferred to you under box 9. If you have a spouse in university, that is transferred to you under box 8. So we have all these totals, box 1 to 9. We add them all up, put the total in 10. I would suggest you put zeros in to the boxes that don't apply to you, just so everyone knows you considered them and nobody else writes a number in there later. If you have more than one employer, you need to say so on the back of this form. The second employer you fill in the TD1 form for, you should put zeros all the way in the first page and tick the box in the back, because you can only claim these personal credits one time. If you have two employers and you put the credits on both forms, you're effectively attempting to claim them twice. And when the time comes to do your tax return, you're only going to get one deduction. So you won't have had enough tax taken. That's fairly common in my tax practice. Somebody comes in with multiple T4s and they haven't had enough tax taken because they didn't do their TD1 form properly, telling the other employers that they already had an employer once they had filled in their form for their first employer. Non-residents get professional help before you fill in any forms because your situation's not very straightforward. The federal form, of course, I already mentioned, this provincial form is just for Ontario. If you want additional tax to be deducted, you can write that on the second page of the form, and they'll take that, your employer will take that off and send it to CRA. And a reduction in tax goes on T1213 if you think there's a legitimate reason why you shouldn't be paying as much tax. You can fill that in. So that is your Ontario TD1 form for 2025. How to fill it in, give it to your employer so the correct amount of tax will be taken from your paycheck all through 2025.